Hello everyone, welcome to the Market Outlook Midweek. Gaurang Shah here from Geojit Financial Services, and last week's correction in the market due to the concerns from the global front and of course the rate hike and inflation and slowdown fear. I think we have corrected quite a bit from those levels that we had recently been close to about 60,000 plus on the Sensex and about 18,000 or thereabouts on the Nifty to the current levels where we trade. After seeing continuous correction last week and of course beginning this week on Monday, we did see some amount of flattish move yesterday, and as we have come back to the trade this morning, there has been recovery from the morning lows that we've seen. So just to familiarize you with the levels, Sensex is trading at 56,760, down about 350 odd points. Nifty is at about 16,900, down 107 points. Nifty Bank down at trading at about 38,050, down 310 points. And on the rupee dollar equation, well, after touching a lifetime low of 81.93, the current levels on the rupee dollar equation is 81.90. And on the energy basket, we've seen a couple of months low. The Brent is trading at about $85.20 a barrel, and NYMEX is at about $77.50 a barrel. So I think this week is going to be equally eventful. On the domestic front, tomorrow you have the F&O expiry, and on Friday you have the credit policy. And on the credit policy front, the expectation is that there is going to be at least 50 basis point hike from the RBI governor post the recommendation by the Monetary Policy Committee. And our sense is that this could keep the markets choppy and volatile, and along with that you will have some global data points coming in as well, which will of course have its impact on the world markets. But given the correction that we've seen from the recent highs and the levels where we are trading, my only request to long-term investors is to stay focused on fundamentally sound companies, allocate more capital towards equity market whenever you see these kind of corrections coming in. And this, I say this with a lot of responsibility and the fact that we are relatively in a much more better situation than the emerging markets or the developed markets. Inflation is within the control. Of course, we'll have to see the comments by the Honorable RBI Governor on Friday when he unveils the credit policy. On interest rates front, we are relatively better. On GDP number, we are also comfortably placed. And our sense is that coming October second week onwards, you are likely to see the curtain raiser for the second quarter earnings this financial year, and that could possibly give you some direction in the market if there is some positivity. The problem in these kind of situation and circumstances, friends, is that these situations are extremely fluid. And I did mention last time that there is a clear and present danger as respect to the slowdown interest rate revisions by various central banks across the world. And of course, concerns of inflation moving to a higher level and not coming within the control despite of all the steps that will be taken by the respective central banks in the world. So I think it's extremely difficult to have any kind of, you can't presume anything in this kind of a situation. You can't take anything for granted. And you have to deal with the situation and circumstances as and when it unfolds in front of you. In that kind of a scenario, there is possibility that we may head lower. But I think notwithstanding the short to medium term pain, and not to forget, from June up until recently, we had recovered quite smartly and within a short span of time. So this kind of correction because of global news flows, whatever be it, is all give and take. So I think some pain would be there as we go forward, but we will possibly find some direction sooner rather than later. So keep on your commitments to your investments into equity market via SIP mutual funds or via direct investments into equity market. The only request is if you're doing your own investments directly into the equity market. Just be a little bit careful, cautious, and buy some quality sound names. Buy quality, don't buy quantity. This is what I say every time to a lot of investors who ask me questions about certain lesser known names and undervalue, in valuation wise, single digit, double digit stocks. So as usual, as every time, there are two investment ideas. There are from two different sectors, of course. The first one is from specialty chemicals sector, Aarti Industries. Our sense is this China plus one policy will play a very significant role in the recovery of specialty and chemicals companies and its performance, both locally as well as globally. So Aarti Industries is one particular company that we are extremely positive on. And come month of October, you will see month-on-month sales number. Autos is something that we have been extremely positive right from the time this sector faced semiconductor chip shortages, logistics side issues. And over the past 2-3 months, it has been one of the outperforming sectors. So from here, one of the strongest players in the last couple of months, M&M, Mahindra and Mahindra, soon to launch its electric avatar in form of XUV 400, and you'll have many more coming through. And of course, run rate in terms of Scorpio End and Thar remains extremely strong, along with tractor agri equipments and of course multi-utility vehicles and light and medium and high heavy commercial vehicle segment. So two investment ideas, Aarti Industries and Mahindra. Only request is start accumulating, and as and when you get dips, you can definitely accumulate more. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye-bye.